we have a new catalyst for Tesla stock, which I believe could make Tesla stock go up 10% in one single day. Take a look at this first. We are planning to grow production as quickly as possible in alignment with the 50% compounded annual growth rate target we began guiding to in early 2021. In some years, we may grow faster, and some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of a long-term 50% compounded annual growth rate with around 1.8 million cars for the year. That is quite a bit less than 50% year over year. Wall Street is going to adjust their expectations closer to what Tesla is saying it is probably going to do. If Tesla delivers only 1.8 million vehicles this year, that means only 37% year-over-year growth when you compare that to 2022. In Q4, Tesla delivered 405,000 vehicles. So if you just take that number, we multiply it by 4, Tesla is already at 1.6 annualized delivery rate. Production is actually a little bit higher. Here's what happens if we analyze production. We get almost 1.8 million vehicles already. Are you telling me that Tesla is not going to ramp its production this year at all? You're telling me that the factories that are being ramped up in Austin, Berlin right now, are not going to make significantly more vehicles than the previous year? I find that a little bit difficult to believe, of course, unless something absolutely crazy happens and there is a asteroid in the shape of Gordon Johnson that drops right on Giga Austin and right on Giga Berlin. So imagine when it comes to the Earth, it just splits in two and it somehow lands in these two specific locations. Okay, if that happens, then I would be wrong. Although Tesla may have a reason for that. For example, if they decide to shut down factories temporarily to upgrade everything, and if you do have a very bad, terrible, horrible recession, then yeah, 1.8 million deliveries for this year is very possible. However, if things just go fine, not well, not great, but just fine, but not horribly bad, I would expect more than 1.8 million deliveries.
1.8 million unit volume indication for this year is somewhat more supply constrained and demand constrained. Then I have a follow-up on cost. But is that an accurate statement?
Well, okay. I mean, our internal production potential is actually closer to 2 million vehicles, but we, we're saying 1.8 because, I don't know, there just always seems to be some friggin' force majeure thing that happens somewhere on Earth. And, we don't control if there's like earthquakes, tsunamis, wars, pandemics, etc. So, if it's a smooth year, actually, without some big supply chain interruption or massive problem, we actually have the potential to do 2 million cars this year. We're not committing to that, but I'm just saying that's the potential. So, and I think there would be demand for that too.
Because Tesla is guiding for 1.8 million deliveries, look at this. Morgan Stanley is sitting at 1.8 million deliveries for 2023. And so are many other Wall Street analysts, although some would be closer to 2 million. I would probably be closer to 2 million, assuming that nothing really terrible happens, like another factory shutdown, another conflict between countries. Assuming that does not happen, that's what I'm anticipating, which is, I think, more likely than not. And this huge increase after hours is probably largely due to this potential guidance of 2 million deliveries this year. However, Elon did say that he's not committing to that, so we really shouldn't hold him accountable to that, which means it is not priced in. And the last time Tesla really beat delivery expectations was about a year ago. This is a screenshot from earlier, and Tesla shot up 13.5% from the moment the markets closed to the moment the markets opened, with Elon keeping the expectations lower for everyone. This catalyst is now back in play.
The most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So I mean it's hard to say whether that will continue at twice the rate of production, but the orders are high, and we've actually raised the Model Y price a little bit in response to that. So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so.
What does this mean for Tesla? If this demand is sustained and if it does continue, that would mean Tesla would be able to sell 4 million vehicles already, because the current production rate is close to 2 million vehicles per year already. And simply that would be 4 million yearly deliveries if that demand continues. However, I would like to caution everyone here with that statement. So pay very close attention for the next 1 minute. Before, Elon did say no further sales planned after today, and Elon sold in August later, and then he sold 2 more times later after August. This statement, I believe, was a 100% true statement. Now, if someone asked Elon, what do you think the chances are that you will sell Tesla stock again this year? I think he would have probably said fairly high. But what does that even have to do with production? That has nothing to do with production. Well, I would like to caution you. You see, currently, Giga Shanghai is literally shut down for the Chinese New Year. That means that the statement that Elon made, if I take that statement literally at face value with absolutely zero interpretation and any assumption, I would have to think that when he says the order rate is twice the production rate, I have to exclude Giga Shanghai from that. And while the inventory has come down, it has not fully come down in the US. Certainly, at least for Model 3, the order rate is not twice the production rate. Maybe with the Model Y, that is the case, but also we are not really seeing that backlog coming back just yet. Now, however, I would assume that what Elon meant is actually what most people assume he meant, because this is not his personal Tesla stock sale. I don't think he would be playing this sort of game here, although there is a chance. So I just wanted to share that with everyone just in case. Yeah, in China, the backlog has not increased yet, although keep in mind that January for China, That's such a difficult month, and also Q1 is the most difficult quarter for automakers in China. And also specifically in Elon's defense, you always have a big spike the moment you cut the price. Especially in this case, there was so much media talking about these price cuts. Any news website you would go, any channel you would turn on, everyone was talking about the price cuts because they were so huge. So naturally you would expect a big spike, but now it has been some time since that initial price cut. So that demand should be evening out by now. Then you consider everything, I would say most likely he meant the production rate of all of the factories on an annualized number. Just the big question is, will this be sustained? Which I would expect it to decrease noticeably in the near future. And then we'll see what happens after this initial excitement wears off about these crazy price cuts.
After recent price cuts, analysts released expectations that Tesla automotive gross margin excluding leasing and credits will drop below 20%, and average selling price around 47,000 across all models. Where do you see average selling price and gross margins after the price cuts?
Yeah, go ahead.
Yeah, I'll jump in on this. So, there's certainly a lot of uncertainty about how the year will unfold, but I'll share what's in our current forecast for the moment. So, based upon these metrics here, we believe that we'll be above, both of the metrics that are stated in the question. So 20% automotive gross margin, excluding leases and red credits, and then 47K ASP across all models. And so, two other comments I want to make on this, just tactically on sequential ASP changes from Q4 to Q1. Just as a reminder, the ASP reduction is not as large as the reduction in configurator prices. As in Q4, we had backlog customers that we're delivering cars to at a lower price book, given that backlogs had been so long for so much of 2022.
If you watched the previous videos, you saw how there were quite a few people that ordered cars many months before, and they took delivery in the middle of November or even towards the end of November at a significantly lower price, for example, a Model 3 or a Model Y. So this confirms that the auto gross margin got reduced not because of these price cuts in the US, but more because of the price cuts in China.
But then also there are various programs in place that we used in Q4 that lowered ASPs. The second comment I wanted to make here is that, as a management team here, we're most focused on what our operating margin is. And so, as other areas of the business become more important, particularly the energy business, which is growing faster than the vehicle business.
Long term, I believe that the energy business is going to be bigger for Tesla than the auto business if we do not include full self-driving. So if we just look at the pure automaking business, I believe that will be a little bit smaller than the energy business. And currently, I don't think energy is really priced into the stock. Maybe a little bit, not much. And full self-driving, and don't get even started with that. It's not priced in at all. You basically get that for free currently. That's a huge reason why I am all in. Tesla stock is the only stock in my stock portfolio.
And as we're heavily focused on operating leverage here, improving efficiency of our overheads, we think the right metric for us to be focused on is operating margin. And so I wanted to make sure that I shared that with the investor community as well, because that is what we're primarily managing to now.
This chart right here is one of those almost too good to be true charts. And by the way, every time I made millions, I did something that appeared to be too good to be true. And usually when you see things like that, usually they are too good to be true. But the few times you miss out, you will be so wrong and you will miss out on the lifetime opportunity. So just looking back right here, the operating margin is increasing while the average selling price of the vehicles is decreasing. And here, if you really account for inflation, this would be basically flat or maybe even decreasing a little bit still. So well done, Tesla. While you are ramping 2 factories currently and coming up with a new battery technology, 4680 batteries, you are still increasing your operating margins. That is very good. And this is all happening while the gross margin is going down, but the operating margins are going up. Very impressive. And this is the buying opportunity of Tesla stock explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.